Good morning, everybody. The sessions are running a bit late, and what everybody told me was the session in the morning, just before lunch, is usually the best session because people are keyed up. It's probably turned out to be the worst time of the day because people are hungry and yearning for lunch. Usually, the session after lunch is said to be the worst session to get into. So we'll try and keep it lively and interactive. The session right now that we are dealing with is sustainable growth through serial funding and challenges, essentially looking at the entrepreneur and the investor community. As we saw earlier in Kunal's session, there aren't too many investors out here, so we would like to inquire why. Because without an investor community, we won't have a sustainable ecosystem. It's quite unlike the Scott Adams, Vijay, the desperate venture capitalist, who says and screams, "Take my money, take my money." I'm sure if you've seen some of those Dilbert cartoons, you would connect with it. But without further ado, I'll just introduce the panelists, and then we'll get into a short video which will set the context of what we're talking about. Kunal has already been introduced and engaged the audience. Biswaroop has a very, very interesting background. He, amongst other things, has run the digital marketing campaign in the previous general elections. So there is a lot to learn from in terms of bringing all the elements of future of CRM and analytics that we spoke about is actually past for him. So that's a very unique perspective. And Sanjay Nishank is the co-founder of GREX, and we'll see a short video which hopefully will set the context of what we're talking about. So with that, if we can just move on to the clip.
India, 2008. Company A begins at the value 4 crore rupees. Today, its value is 900 crores. Company B valued at 2 crores in 2011. Its current value is 12,000 crores. Recognize these names? Did you get the opportunity to invest in these high-growth companies? The billion-dollar question is, how do you get early access to these unlisted companies? In 2012, a group of technology entrepreneurs, venture capital professionals, private investors and engineers joined together to bring forth unlisted companies with high potential for quality investors. GREX is an exchange-like disruptive technology platform, bringing together investors and unlisted companies for information exchange and securities transactions. With GREX, you get the choice of investing early in a plethora of hand-picked, vetted companies. Communication and data tools to stay updated with companies you follow. Get better liquidity by way of easy entry and exit. Make your next investment secure, transparent, seamless. Don't leave your growth to chance. Collaborate, co-create, and co-invest with the best in the industry. Be the force behind the next big thing. Begin the journey at grex.in.
Right, so that hopefully gives you a perspective. So let me ask Sanjay you a question. You've spent most of your early working life working with IT companies and doing very different sort of things. So what brought you to start this, and how do you view sustainable growth in terms of serial funding and the ecosystem?
Right. Hi, good morning. So, as Rajiv, you mentioned rightly, I have spent quite a few years in IT companies before we started this private placement platform. So, I think going back to some of the discussion which has already happened, a couple of guys, four of us who co-founded GREX, we had initial experience in terms of setting up another company in which we were doing portfolio companies, where we were mentoring and hand-holding the companies, and later at some point in time, we were going to the angel investors to access capital for those companies. And obviously, as we saw some time back, even if everybody keeps talking about the size of this market and understands the implication of funding these companies, there is huge amount of hesitation in terms of supporting these companies in arranging, let's say, one of those scarce resources, which is capital. So we went through similar kind of problem before we started this platform, and then we realized that even if we are, we cannot keep on, relying on those numbers that Kunal talked about, let's say 1,000 plus active angel people who keep investing in all the startup companies. Because if you go through all these newspapers, you keep on hearing the same names and same people. But for a country of size of India, if we cannot create that ecosystem where people are, startup investments are risky, but people have a little more appetite in terms of taking a bet on startup companies. If we cannot create that ecosystem of investors, it's going to be very, very difficult for the country as a whole. In a couple of years down the line, by 2025, 55% population of India is going to be less than 35, and all of this, these guys need jobs. Most of the large companies are now in a scale down mode. A couple of days back, if everybody would have gone through the newspaper, or most of the IT companies are going to reduce their resources by at least 50% in the next 10 years. So with the rising population who are going to look for work, and with the people that are going to come out of the work, so what is going to happen to all these people? So the only way that we can create more wealth for the country, or enhance the GDP and all that, is creating the smaller companies doing good amount of work. And to do that, we need to provide a structured platform so that we can make them access real capital. So that's what probably, that's the interest that we had. And since we ourselves went through that very personally, and probably for a year and a half, in which we were not able to find out the right kind of people, then we thought that we better do it. And then in the process, we actually talked to most of the formal platforms also, including the exchanges and the other platforms, including the angel networks, where we had started reaching out to get capital. But of course, we saw that there are major issues. So that's what we try to address as part of this platform.
That's a very nice macro perspective, leading on from what Kunal was mentioning earlier. But from an individual standpoint, Biswaroop, you've worked with a very, very large, on a very, very large canvas. I don't think it can get bigger than that in India. When it comes to election campaigns, there's probably nothing which is bigger. But when it comes to setting up an own venture, what are your comments on sustainable growth through serial funding, and how do you view it as an entrepreneur?
See, I've failed myself personally in 4 or 5 ventures, primarily because I could not raise funds. So the primary, and forgive me for being slightly biased. So largely, since this is the IIMnetWORK and I'm not from a premier B school per se, I guess there are certain colored lenses with which the organized funding industry currently works. If I carry a double IT and a double IM brand, at least 3 extra doors open up for, at least the first meeting would happen. I hope everybody agrees here, right?
So that's another element of the mafia that Kunal was talking about. Although he mentioned it in a different context, but this is yet another dimension.
And having experienced it firsthand, not once, twice, but multiple times. So this time on, I'm smarter. One of my co-founder is actually from an IIM. So I guess we'll be better poised to get some funds.
Maybe there is an opportunity to leverage the IIM brand and create a platform for leveraging that.
I agree. See, when an entrepreneur begins the journey, funding is the last thing on his head, actually. It is a passion to probably effect a change. or passion to do something that he was itching to do. It might not end up becoming the poster boy of any particular industry like a housing.com or a Flipkart, but at least a successful enterprise can fend for itself, make some good monies and generate employment. If people like GREX and other such platforms are wanting to impact change at that particular level, not looking at crazy valuations, etc., then definitely a structured environment, and of course what Kunal also talked about, not just 800, 900 angels, maybe 1 million angels can come out there, provided there is some degree of credibility that can be established. Academics obviously are very, very credible in nature, but the 10x multiple or the 20x or a 50x multiple that typically people look at, what's the potential, will it ever become a $5 billion enterprise? It might not, or it might as well. So that stumbling block, if somehow it can be lubricated or made more convenient, make an ecosystem, I guess that could be the way forward. I don't know.
Right. And Kunal, when we speak about the 20x multiples that angels or VCs typically go in for, it's certainly not that they would expect all their investments to give 20x, right? But it's my understanding is that it's probably a statistical number that they have derived based on a probability of failure, right? So how do you see that ecosystem and that mindset changing in order to facilitate the entrepreneurial environment and lubricate the funding?
Yeah, so I think, in the financial environment or the financial industry, there's always been a risk affinity towards looking at really high risk, high return. We see it in investment banking. We saw it as the basis of the entire financial crisis of 2008, 2009. We've seen it happen many times over again. But it's basically because of the economics of the way VC funds work. You get the most media exposure for your 20x return. The partners who are running the fund, the analysts and everything who are involved get their compensation based on generating that 20x return because they get to keep a part of that upside. But for each of the failures that basically happen, the only downside that they potentially risk is, say, their reputation or the ability to raise the next fund. But if you have two 20x's, then your next fund is basically guaranteed. So it's really the like you said, the pattern that people are following. It's not even just the statistics or accounting for it. It's essentially their own experience that leads them to that. But the bottom line is that there are many good businesses that are not going to generate that. And even just during the tea break, I spoke to a couple of people about businesses that are, say, manufacturing oriented or core technology oriented, which are not going to generate the returns of a Flipkart or a Paytm or a Snapdeal, but they're very well-funded businesses. There are VCs today who are going out on a limb and saying that I'm going to invest in solar cells, I'm going to invest in core silicon, I'm going to invest in battery, alternative energy, things like that. These are not software scalable types of businesses. They will take time, but they are also very warranted investments to make as well. And I think that's why a diversified platform needs to exist, because some people in this room, maybe from that industry of energy, power, maybe from manufacturing, they understand those businesses, they can add value to those businesses, but today it's very difficult for them to access it because those aren't the guys who are highlighted. They're not the ones who angel networks run after. They're not the guys appearing on Let's Venture and things like that.
Right. And very interestingly, we had Ashish from BSE, and in fact, what I was thinking while he was speaking and after you spoke is that it's not just a problem of people not doing angel investing. And I was as surprised as you were that there was absolutely no angel investor in the room. I think 2 or 3 of them are sitting right here next to me, but not too many other than that. The other dimension is, although I don't have the statistics offhand, is that the number of investors in the stock markets in India is also abysmally low. The retail participation is, we can call it negligible. According to you, what are some of the reasons why people are apprehensive of these sort of investments? Just taking on from the equity markets to startups and entrepreneurial ventures. What is it that prevents such investments?
Right. See, there are, so we are talking about 2 different types of markets. One is the public market, and what essentially now we are talking about is private market.
Yeah, but the common thread which I see is the element of risk. So people are essentially risk averse. If you ask them to, historically, if you ask them to put money in gold, they would put tons of money in gold. real estate by all means, which is good news for Biswaroop, right? But not risky investments as equities, private or public.
Yes. I think startup investments are inherently risky, so there is no doubt about it. I think, and as a nation also, as Indians, we are a bit of risk averse when it comes to investments. So that way, so that's probably one reason why even in the public markets, the retail investors are probably going to be the last ones who put money. After everything, all the cream has been taken out, they are the last ones to go in and first ones to go. They are going to make a minimum amount of money in the market. So. And riskiness, both of these markets are risky. I think riskiness is always a factor, or it has some relationship with the information also. So over a period of time, if you compare investments in public market, let's say 5 or 10 years back, and you compare that to the number of people who get involved in public markets, it has definitely multiple. It has definitely increased multiple times. I think one of the primary reasons for that is there are so many people who are involved with the public stock markets who provide information. One of the ways of reducing the risk of investing is always about removing that information asymmetry. Initially 5 or 10 years back, it was more of institutional people who are putting money, but now retail guys have also started putting money. So obviously, the information asymmetry is one of the primary parameters that has to be taken care of, even in private markets also, if we want to enhance investor participation.
Right. And Kunal, from your perspective, is the information asymmetry very different in India as compared to the Silicon Valley or the more developed markets?
So definitely, if we look at where the state of India is today, we're much earlier in the process, so the information asymmetry obviously is much larger. But I think the information asymmetry today, one of the core reasons behind the slow pace of growth in India is that there aren't very many proven examples of what could happen. In Silicon Valley and in the rest of the world, people believe entrepreneurs much more and are willing to risk much more money on it because they've seen over a period of decades what can happen, how can consumers react, what are the potential exits, what are the potential valuations, what are revenue sources, et cetera, et cetera. Whereas in India, by and large, we've not gotten to that stage yet where you've seen large-scale successes. Yes, you see on the front page of the Economic Times amazing valuations, but none of these companies have really exited. Yes, last year there were more exits than in any of the years before, but those are very specialized sectors, very specialized organizations. They have large IPOs or large M&As. So the information is more about how do you view it from an end to end. So I think someone had mentioned earlier, how do you justify the multiple on price and things like that? Well, if you have a platform, how do you do it on the stock market today? You look at all the energy stocks or all the IT stocks and you compare them to each other and you compare their revenues and their growth. And then and then equity analysts are there who think about this. Then there's the stock price. So there's at least a dozen different ways in which you can find out whether this company is valued appropriately or not. In a private transaction or in a startup, especially when you don't have those platforms and you have all that information available to you, the information will be there because the entrepreneur says that it's worth 100x and the investor says it's worth 1x. You can sit there and argue about that all day long because there's no parallels to basically draw that with, and those parallels only come in when you have exits.
Right. Absolutely. And coming back to Biswaroop, what you mentioned about the only thing you mentioned about it not being about money, right? So every entrepreneur starts off with, more than a vision. Corporates have a vision. I think entrepreneurs have a dream, right? So in that sense, there is a bit of an emotional connect and bonding to the venture. It's essentially like your baby. When somebody from outside, whether it's an angel or a devil or anybody else who may come in and invest in your baby, how do those dynamics play out? And what is the impact on the sustainability and the direction of the organization?
So I definitely agree that there is more of the heart involved rather than the head. And had it been more structured, like Kunal just said, so when the entrepreneur is actually wanting to seek some funds, he is trying to sell a dream. That is my dream. Honestly, you might or might not buy into it. And then when we start talking about money, it is like trying to figure out what is the worth of my child in the actual market and how much are you giving some value to me. And that is where the biggest fear, at least from our perspective, if I were to say as people wanting to raise funds, is great, we will today take some money and pump it into our dream. Will this guy share the same dream? Point number one. And if he doesn't in the future, will he somehow try to tweak the growth or the passion that we are trying to drive the organization with? So that is where I guess it could go wrong from both the sides. The entrepreneur might be too emotional and not figure out the right time to raise funds. And probably the investor also could not maybe see the passion I don't know, strongly as one might want him to feel it.
Right. It's, I think, a question of passion versus pragmatism. One is passionate and the other one is probably pragmatic. Which also brings us to the issue of, the sequencing of funds, right? There has, I haven't yet heard the media, mainstream media, talk so much about the fund as you go kind of model. We've essentially heard about large ticket investments, and that is what the media keeps talking about. But Sanjay, from your experience, is that a reality, and is that a potential avenue to change the way things are done?
That's a pretty important question. I think the topic was sustainable growth through real funding. And sustainability, for as far as I understand, in a funding ecosystem, is acceptability of a transaction or of a relationship between two different parties. So on the one side, we have got the companies, and on the other side, we have got investors who are willing to put money. So till now, what's going on, in the last, since the time the VC investment started in India in startups, let's say around 2006, 2007, for the last 10 years, most of the times, VC model has been structured a little bit based on how Ps work, in the sense that there is huge amount of money which a fund, which a PE fund or a VC fund puts in a company in return for a specified percentage of equity. But in a way, if you think about it from a company perspective, a company like Biswaroop, as Biswaroop was saying, it's your baby, and you're probably, somebody needs to believe in your idea, and at some point in time, you probably want to grow and you want to expand, and you probably need a specified amount of money, probably to go to the next milestone. But that's not exactly how it works when he tries to raise funds. And that's probably the first instant where there is a bit of disconnect between what the investor, the VCs want to do with the amount of money that they have, or the resources that they have, and what the company wants to do with that money. So there is this sustainable the funding, this relationship between these two parties can be more sustainable or long-standing only when there is a bit of interest alignment between the VCs and the company. What we have seen from our experience in the last 2 or 3 years is that from a company perspective, or from an entrepreneur perspective who has spent huge amount of time in building the company to the level at which they can now say that I want to raise money so that I can grow, They'll probably want to take enough amount of money so that they can become profitable, and so that they can increase the valuation also in the next round when they want to go to the market again to raise funds. Because for a private company, it probably grows multiple times in a very short period of time. So it's also in the interest of the entrepreneur that he gets access to need-based funding rounds, meaning he raises some capital, and it actually helps him to create many more products, access many more markets, and then in the process actually enhance its own valuation to a level where probably there will be larger investors who would be willing to put money at a better valuation. So need-based funding is probably one of the important perspectives from a company, from an entrepreneur point of view. From an investor point of view also, the way that the funding rounds work, the investor puts all the money at certain valuation at a point in time without even getting enough visibility of how the company is going to do, let's say a year or 2 years down the line. It also makes sense for the investors to put some amount of money at point X and then let the company utilize that and get to a level, and then at point X plus Y, it actually finds that the company is utilizing the money properly. So now, even if at a higher valuation, the investor would be sure that he's probably going to put his money back because he knows that I'm going to get my funds. Because the basic objective of an investor is to get some returns or to get an exit out of his investment.
So let me ask Biswaroop, from a marketer standpoint, how does that resonate with you as a marketer entrepreneur? Does it fit into your scheme of things? Would that be ideal, or?
Obviously, that is the ideal expectation. But then the problem is we are not trying to compare apples with apples, right? The space could be the same. If I could just take my case, or rather the case of my company, we are in the real estate advisory space. But if somebody tries to equate me with a housing.com, that is really not fair. The business is probably overlapping somewhere, particularly on the internet domain. Or somebody then equates me with, let us say, organized real estate advisory. Even that is not fair. So once the discussions regarding need-based funding begins, explaining it to an investor becomes very tough because we are already there in a space which is crowded, which is getting tremendous amount of media coverage, frenzy for whatever stunts or whatever that is happening is a different issue altogether. But definitely we need to be at least heard in that same peer space, for which as a marketeer and being responsible for taking my brand out there in the market, I need to take that extra effort. Should that effort be taken for the benefit of the business is open for anybody else. Like Kunal also said, 20-25% of the time of a year, if the co-founders are spending money in raising funds, who will manage the business, who will drive the business?
And this issue of need-based versus, go big or go home kind of concept, is this discussed widely in the Valley, and are there parallels there, or are there hybrid instruments which can take care of this sort of a need?
Yeah, so to your last point, yes, there are hybrid instruments, but I think it all boils down to technology. And there was there was a statement made by one of the speakers earlier this morning that was, in the last 2 years, more information has been created than in the entire history of mankind prior to that. So if you basically draw a parallel to some of the other emerging business models that we're seeing, it's about connecting buyers and sellers, right? So if you think about Uber, Airbnb, or any of these other large platforms, it's really about connecting buyers and sellers. And so if you take that entire same sort of platform and you say that when I order a driver or a car from Uber, it's basically there is a car that's available, his time and his service is available for sale at the time that I need it. There's a rating associated with that driver, so I know that I'm not going to get defrauded. There's a rate associated with it. There's a governing body, which is Uber itself, to whom I can appeal and things like that. So you as a customer, therefore, are now, you don't worry about the fact that I'm using an app basically to call an unknown car and an unknown driver from potentially an unknown organization, because Uber doesn't actually own that car or that driver. Same thing with Airbnb. You are willing to travel halfway around the world to a city you've never been to, stay in somebody's house who you've never met or spoken to before. Would you have done that 10 years ago without the availability of information? So while these are more standardized things, like, a bed to sleep in or a car to take a ride in, investing in a company is definitely much less standardized and is much, less freely acceptable to large amounts of people. But it's essentially the same thing, which is connecting buyers and sellers at the time when the seller, which is the entrepreneur or the company, is looking for money, with the available data that they have, with the community that they've built up over time, the ratings, the information, et cetera, and buyers, which are investors who have different risk profiles. They may not be interested in investing in a company that has no customers and only a proof of concept and only 2 people, but they may be interested in a company that's clocked 10 crores in revenues, has 5 customers, and is on its journey. So it's really making that meeting happen so that 25% of each founder's time, or the company's time is not dedicated towards just making this process happen. Just like a taxi driver, no longer, if you're part of Uber, they don't spend time sitting at a taxi stand waiting for a call to come anymore now.
Yeah, that's an interesting perspective, and again resonates with what Ashish just mentioned about technology being at the core of everything. If we could get a platform together, and we do have platforms, if these could really scale up and get the nation together, at least people in this room should be inspired after today to look at not only their entrepreneurial ambitions, but also to fuel the entrepreneurial ambitions of our brethren. Then I think we will have at some stage sustainable growth through serial funding. With that, I think let's come to the last leg of our discussion, which is really a rapid fire. We look at it from essentially an entrepreneur standpoint, and I imagine you would ask the question. We had quite a few people who are already entrepreneurs, and I'm sure a lot of others are budding entrepreneurs or have entrepreneurial ambitions. How many of such people are there in the room? Okay. So these are the budding entrepreneurs, right? And then we have the entrepreneurs. How many of them in the room? Okay. So who are the others? Right. So what we'll do is we'll ask the panel, and then we'll put the questions to the audience as well. And you could react in a word or a phrase by exercising your vocal cords, because taking the mics around would take a lot of time. So from an entrepreneur's standpoint, because you've all been in entrepreneurial ventures, what's the one fear that you have while raising funds, apart from the fact that you may not get them?
That is the actual fear, कि मना कर देगा, क्या करेंगे?
मना कर देगा, right? But no other fear.
No, honestly not, because when you're out there, you're hustling. You
Right.
need to hustle, right? So
Right.
that's the only fear probably.
Kunal, any fear?
Obviously, the biggest is getting the money, but then it's getting the right money.
Right.
You don't want to get. I've been involved with startups. You get the wrong guy, and suddenly half your time goes in managing the wrong guy.
Okay. Sanjay?
Well, again, it's related to funding, but it's getting the money at the time that I need. I mean, I know probably if I don't get it, then I'm not going to be existing next day onwards. So I think for me, time is more important before I judge on the quality of the money, actually.
Okay. From the audience, a quick reaction. What's the one fear anybody has? Control. Loss of control. Okay. Anyone else? Fearless group, huh? Right. What's the one challenge? I know, Biswaroop, you'll not be able to condense it into one, but the one challenge in raising funds.
Once you've raised it, then the natural question which comes is, now what? What is the kind of interference that we're going to get? Will we be allowed to do what we were,
Right.
actually setting up to do? So far, we have been bootstrapping, trying to sell off our own homes to fund the company, but nevertheless, that is the top fear that we also have.
Right. So now you created a market for all the buyers who were buying your homes.
Yes.
Smart move. The one challenge?
Time.
Time.
It's just purely
Okay.
time, effort. I mean, everybody has 100 questions. So show me this modification, show me this slide, show me that Excel. It's just
Right.
time.
Sanjay?
Yeah, again, once we raise the funding, I think the focus shifts to the fact that now I have taken money from somebody else. So, am I going to be able to lead it the way that I wanted to do? Probably because most of the time there are going to be different viewpoints. So, am I going to be able to take the path that I had envisioned?
Right. From the audience, any challenge in raising funds? Any one particular challenge?
The speed the investors would expect the returns to come in.
Okay.
Money came in, they would expect in 6 months it should be 3 times.
Okay. So the velocity is just not real. Yeah.
Then you show this business plan and it's not halfway through. So what are you doing?
Right. Any other challenge?
Losing the core.
Okay.
You end up being steered by a team who doesn't even know what they're doing.
Okay.
And who has got 16 things happening and they think that the other 15 are as good as yours. So they would like to follow that.
Right. Yeah, absolutely. What's, again, getting slightly more into the nitty-gritties in terms of once you get the funding, what's the one thing an entrepreneur doesn't want to see in the term sheet? A lot of things I know. You got to condense it into one. Top of the mind.
I mean, without getting too technical, there's this whole thing of drag along, tag along, forced exit, and things
Right.
like that. I mean, so I'm not going to explain in detail what they mean, but basically investors start acting like bankers once you start getting down to term sheets. They want guaranteed return, they want the first exit, they want to get the upside, and they want their principal back, and all these other things. I mean, it as an investor, as an entrepreneur, it makes you, see with anger that are you an investor or are you a banker?
Right.
Yeah, I agree. I mean, entrepreneurs don't enter into a business, according to me at least, to make an exit. They are there to grow. And then the moment you raise funds, somebody is asking you, when will you give me the first opportunity to exit, at what valuations? That is slightly painful.
Right. Sanjay?
No, I kind of agree with Kunal on this. So.
Okay. Some different reactions from the audience? Anything you don't want to see in a term sheet? Okay. So despite all these challenges, let's switch the view a little. What's the one thing which gets you up and going in the morning, every morning? What's the one thing that keeps driving you as an entrepreneur?
Honestly, it's passion. I mean, you call it madness, passion, zeal, whatever. I mean, yeah, you're there 24/7. So do we really wake up in the morning or do we sleep? No, I guess the brain keeps ticking is something.
Right. Sanjay?
Well, I think it's again the passion, because this is probably something for which you have left, let's say 15 to 20 years. 15 to 20 years of your career and probably the opportunity that you could have got. So it's all about the passion. Yeah. And of course, after a certain period of time, it also there are other people who are involved, and then probably who also start believing in you. So it's a bit of that also, that if you are not going to do well, what happens? There are certain other guys who have also started believing in you. What happens to that belief and trust? Because you usually will not be able to replicate belief or trust so easily over a period of time.
Right. Kunal, you'll go with passion as well?
Look, I think most entrepreneurs, pedigreed or not, can probably make a lot more money working for somebody else than what they're doing in the first 5 to 6 years of their own venture. So it's certainly not for comfort that they're waking up in the morning. It's basically because I think everybody wants to, in some way, shape, or form, make a dent in the universe.
Right. And from the audience? Okay. Right, to make a bigger impact on the community or the ecosystem that you're targeting. Okay. Right. The desire to convert it into reality and to make it happen despite all odds. I guess that's... it's your dream and your vision. Absolutely. So it's...
a good balance. It's your creation.
Right.
The satisfaction of proving to yourself that you can provide value to others, which you may not get even if you're the chief executive, the highest paid chief executive in the world, or the best company in the world. That person may still not be sure whether you will be able to make it on his own. Whereas you have the satisfaction that you have had the guts to make it on your own. And you could provide value in it.
Right. Okay, so independence, and that kind of goes back with the fear of loss of control, the desire to make a change. I think everything ultimately boils down to that burning desire or passion or dream, or as Biswaroop mentioned, madness. I think that's what it boils down to. And one final question to kind of wrap it up. I couldn't do without numbers, so I have got some numbers into the mix now. On a scale of 0 to 100, where do you see startup valuation, 0 being absolutely ridiculously cheap and 100 being absolutely insanely expensive? And we're not talking about the deals that the media talks about, but from your sense of the market, are we on the fear-greed index, if you may call it, where are we? Are we balanced? Are we towards greed, or are we towards fear and pessimism?
No, please. least. I'm not the only one. No, so I think it differs sector by sector. And I'll just do this quickly. E-commerce, and particularly local commerce or food tech or whatever you want to call it, way overvalued, in my personal opinion. Sorry, so if anyone is in that
You're
space
off the
out
record, don't worry.
Yeah, but everything else, undervalued.
Everything else undervalued.
Everything else. I think that we're just at the very, very beginning of so many of these things. But it's going to require a lot more patience because before a lot of these other things become very attractive and buzzy and things like that, so it'll require some patience. But by and large, I think as a nation in entrepreneurship of this kind, technology-based entrepreneurship, we're early.
Okay. Any other reactions?
Yeah, that's true. Actually, except with what we have seen, what we have come across, different companies, it's extremely difficult for any company who is not in consumer space to create some amount of interest in the minds of investors. And it's even much more difficult if the company comes from another city apart from these 4 metro cities in the country. So the valuation that these companies are asking for is low, but still there is so less support for them as of today. But they are probably going to make India what it is what it will be in the next 20 years.
Okay. So essentially, apart from the hyped up sectors, they're not really getting the kind of value. Okay. Biswaroop, any additional comments?
I agree. I totally agree.
Okay. From the audience, any thoughts on that? Where do you guys see valuation? Any tips from the panelists?
I don't know if there's no trick, right? I mean, you eventually it comes down to the core business. I think, but it's basically it's got to be ingenuity, essentially. How creative you can continue to be, and it's also just your commitment. It may take longer, but you've got to you stick it out. I keep giving the example of 197 Paytm because it is 13 years old. And they finally figured it out. I mean, after going through 3, 4, 5 different business models, finally they figured it out. So it's creativity and commitment.
Which is not a renewable resource. It's the capital which is a renewable source. Time is not. So it's other way around. So I'm not talking about hyped up sector or eco times where there are offices and certain offices. I'm not talking about that. Talking about valuations for a company who are actually genuine business. Somebody's giving 75 lakhs in return asking for 70% stake. I'm not talking about professional angel investors. The new breed of angel investor where we want to tap into. And second, what tangible you give me? If I buy a real estate out of the 75, still I'm getting a flat. So that's I don't know how to tackle that. I got that so many times, Right. So I invest in a house where new airport is coming up. So I'm getting some tangible. What are you giving? Shares which are worthless today.
But I think this is the kind of question which we also have come across quite a few times. I think it probably has to be looked at in a different angle. See, all these block trades or block investments that's happening in all the startup companies. See, anytime there is a huge amount of money which one or couple of guys put in, obviously they want to take board position, ownership, and whatever comes along with that. I think this is where we need to break it down so that individuals take lesser amount of bets on different companies, so that they have a portfolio approach. It's like a mutual fund approach, where you spread out your risks across companies with minimal amount of investments, with minimal and affordable amount of investments, so that even if and probably spread it across different kind of sectors which you understand, so that even if some of them fail, which they obviously will, at least you can make up with the other sectors. So the point is more about taking a portfolio approach as far as individual investors are concerned. And this is where the education and awareness also has to happen. When Kunal, when we are talking about that, there are no angel investors. I think each one of us is an angel investor in our own right, and this is where probably there has to be a mental thought, change in mental thought process that we have to go through. If we are okay in investing in SIPs for over a year in all these companies, which we do not even research so well, and we go with some of the schemes, why don't we go through some of the platforms or some of the sources which are already available and find out about these companies and spread my bet across those companies?
Sanjay, just I have a question there. So all these areas where you're comparing to a SIP or a public market, you don't interact with your investee company on a day-to-day basis. Here, if let's say, I appreciate from the investor's point of view that once you spread your bets, it is easier. But please understand from the promoter point of view, for that 50 lakhs, again, if you're managing 12 people, 10 different set of ideology, then forget about that business, what is going on. He'll be just managing the investors. Even managing 2 or 3 is a problem,
Yes.
So then, and the difference is, because this is a private investment where they'll be interacting. In an SIP, if you don't like it, you just pull out the money, and you don't go to fund manager's house and then why didn't you perform, right? So
Right.
the biggest difference.
So this is where I think what I said is that from an investor point of view, that has to be spread. But technology, fortunately has made this interaction pretty easy. This is where all the platforms or structured mechanisms can come into play, where an entrepreneur can actually deal with quite a few people, pretty efficiently without actually, talking to each one of them, every day or every month. Okay, so this is where the technology has a much greater role to play, and this is what has happened. This is not new, which is happening in India. So this has happened, in countries like US, Australia, and UK in the past. So this is technology. So this is where technology is going to play a major role, which is what we are also trying to bring in this system.
So let me play contrarian here and say that although technology has done a lot, but it still cannot, it has given us food for thought, but it hasn't replaced the real need. So it is time for food, and at that thought, let us take a break, right? We'll continue with the discussions over food. That's something that technology has not yet replaced, thankfully.